Alright, this morning I started talking about SMAs, or the simple moving average. So I wanted to make a quick video to go over how I use them and why I use them. I don't like a whole lot of indicators. Lines are about my favorite thing. They show you the best information in my opinion. So my favorite setup right now is I use a 10 SMA on my daily chart. I also use a 25 SMA on my daily chart. And I use a MACD, but I've modified my MACD to my settings are 7, 8, and 3. 7 for the fast length, 8 for the slow length, 3 for the MACD length. And I changed it from, it's by default exponential, but I changed it to Wilder's because when you do that, it lets the MACD match an indicator that I really like called the momentum indicator. And momentum really helps show you where the buyers and sellers are. So you can see like here how it pretty well mimics it, but I think it gives you a little more of a definition, whereas this is still kind of rough here. So I like it set to this length. It really helps me. I don't like having that extra indicator there. So the idea of the setup is pretty simple. I'll go back over here. Oh, one moment. Extend this a little bit. Alright, the idea of the setup is pretty simple. Whenever you're getting a breakout of the 25 SMA, which the 25 is the blue line here, you start to see a breakout right here. You can see there's some green volume coming in. MACD is pushing upwards. We're in an upwards channel. We're coming off the low, so momentum is coming into the stock starting right through here. So you see a breakout of the 25 SMA. You could buy on the first green candle that closes above the 25 SMA. Now that could be this candle here. That could be this candle. That could be this candle. You could even buy in on this candle. Doesn't matter. As long as you're buying in on that cross above that 25 SMA, that is the breakout into a new trending cycle. Once you get up into there, now when you would sell would be a break below this white line, which is the 10 SMA. So you're holding all the way through all of this if you want, and you don't sell until you get a solid candle below the 10 SMA. So right up here, you could even, in some cases, you could actually still hold that even though that's breaking through because that's not technically a solid candle. But on the next candle right there, you would definitely want to sell if you weren't already out of it, unless you're willing to hold it and say that, hey, it could hold the 25 SMA, which it didn't in this case, but there will be examples where it did hold the 25 SMA that'll come across. But you can see it fell one candle below there, and then it bounced back up. So that was likely some kind of news event, and it rejected right after that, and then went back into the uptrend. But again, you break out of a 25 SMA right there. You come back up, you break out. So your first candle above, you're in either this candle or this candle. You would hold it until it breaks below the 10 SMA again. So you could hold it all through all this, take profit anytime you want, or as soon as you see it start to break below, go ahead and sell out of it. That would be an almost break-even trade, depending on the situation of where you entered. But that would be, you'd still probably come out profitable in that one. But here where we get a touch of the 25 starting to break out from it, you could buy in through there, you sell out right through there. Starting to break to the lower side, first candle either here or here, you buy in. You could sell out on a full candle above the 10 SMA. Here, this is where I was saying you could hold earlier. Your candles are not fully above the 10 SMA, so that means you still have the 10 SMA as resistance. So if you had got in, say, here at 287.03 and it fell all the way down here and you didn't take profit down here at 280 and it bounced back up, as long as you don't get a solid candle closing above that 10 SMA, you could stay in that trade instead of taking either the break-even sale on that or the loss on that, depending on where you had entered. And you can see it started to reject there, had a little bit of a struggle there. Now you did technically get one candle above there. You could go ahead and sell your trade. At that point, you would be profitable. Or that looked like a very low volume day right there. MACD was trending down. So if you wanted to hold that, you could say, hey, it's not breaking the 25 SMA here, so I think it's still bearish, so I'm going to hold it. Breaks back below that 10 SMA, comes back up, retests it, still rejects it, and at this point you're down to $273. Your initial entry could have been up here into the 287, 86, 87 range, and you could be getting out right down here. Hell, it bounces back up, hits the 10 SMA here, and you start to get a breakthrough. If you're not out of your trade by down here, this is your first sell indicator. You got in up here at 286, 287. It's down here at 281, 282 now. Don't be greedy. It's a $5 drop. You can take your money. You're watching it, it starts to change trend cycle. It's going back up in an uptrend. You get one big candle. Go ahead and you buy in anywhere through here. You hold it for a couple days, hold it through all this fluff. At no point does it break the 10 SMA. Bounces up through here. You could take profit anywhere through all this. That looks like a very news related event, so that'd be a good time to definitely take profit. And even if you didn't take profit right away, you waited for a pullback, or you waited to see what it did. It pulled back, pulled back, pulled back. Even if you sold on the first candle that's starting to break below there, or the first candle right there that actually closed below that, you still were in around 286, 287 range, somewhere in between there, and you're getting out minimum around the 291 range. Minimum, I wouldn't get out anything lower than 290 if you got in at 286, 287. You can play 10 SMA breakouts. They're pretty good. I wouldn't enter a swing trade on a 10 SMA breakout because then it's less likely to trend that distance unless you got a bunch of momentum and everything. If I'm going to enter a swing trade, I'd like for it to be on the breaks of 25 SMAs because from everything that I've looked at, and trust me, I've looked at all the lengths for the SMAs. I've played with this till there's no more playing with it. The 25 SMA seems to be a very accurate line for a good short-term trend change, and just throw it on your chart and you can see what I'm talking about. I'm showing it as it's happening. Uh, Break here. We're coming out of a sideways trend. We're going into an uptrend. We break here. Trends up for a little while. Starts to break below that SMA. Gets weak a little bit. Damn. The trend's down. Goes sideways. Breaks back up. That's a big breakout there. You get into a long call here. And especially when you're getting into these calls, if you buy a month, 2, 3 months out, however long you feel comfortable, you're going to improve your odds. Because, like I said, it's a shorter term trend, or not even necessarily a shorter term trend. It's the trending direction at that time. So, break above is definitely bullish. Break below is bearish. Get into here. You could hold that all the way through until you get to here. If you want to take your first profit, or again, it's holding 25 SMA, keep holding your trade. Keeps going up, up, up. Take profit anywhere up through here, up through right here. You're getting your first candle break below. That's not even fully broke below, closed below. It's that wick's still closed or still touching there, so you could still be in that trade technically if you wanted to be. But break back up. If you sold out of it, there's another break above the 25. You get back in it. Your sell is below the 10-day. I mean, it's a pretty solid plan overall. By the time, it's the best thing that I've figured out. I'm still playing around with the strategy. I'm not an expert with it by any means, but I have been using the SMAs for a very long time. They're very effective. I'm going to show on a couple different time frames here in a minute too, but I have an example to go over. This morning we were talking about SPY, and I told you guys $314 was a major level. And let me mark that trend line there. Didn't realize I wasn't on that. I said $314 was a major make or break line, and had a couple people ask me why. Well, the 10-day SMA you can see is right here on that candle. Now I have a picture here from earlier today when I was talking about this, and you can see here's that 314 line right through here, and the 10-day SMA is right here, and the body of the candle is below that 10-day SMA. So that created what's called confluence, where we have a resistance area here where price came several times. This is a nice little resistance zone, and it's a round number, so round numbers are typically good areas. And with that being a zone, we didn't have any one specific spot where all these candles were touching, but we had that 314. Everything was in that 314 range. So because we had that 10-day SMA there, that creates a confluence, which told me that 314 was the major level of the day. And what did SPY do? It fought 314 all day. Well, not all day, for the first part of the morning anyways. And then here at 10:30 we broke through 1014, and look at the force that came in through this. And I said that if we got up past 315, we could hit 317.50. What happened? SPY came up here. Here's 315. We broke up through that, through right there is 315. You can see held support through that, broke up through it with force, kept trending, came down, retested the zone, and bounced back up with even more force. And at that point, I was saying 317.50 was the next goal. We hit the 317.50 zone and continued to move higher. The reason that I was able to call out those zones, is because looking on here, I can see that. Let me get these lines off here. I can see on my chart that we're above the 25 SMA, that we have a green candle in the daily chart, and that candle, that body of that candle from early in the morning, then this was probably around 10:30 or so when I took this picture. I could see that body was green, the volume was rising and coming in, and that told me that if we could get above that 314 line, then we could come back up into any of these little areas here. So I said the 315, which would have been the next psychological level. Then once we broke through that, 317.50, which was Friday's major support and resistance level. So once we broke above 317.50, that's why we continued up into the 320s into after hours, and why more than likely SPY is going to open and go to, I would have to assume, about, let me see where it's at after hours right now. We're at $320 after hour, or $321 after hours. Let's get back to the daily. If we're at about 321 now. Okay, so it's not unlikely that we could see SPY at 323 tomorrow. 323 is a very nice target for SPY tomorrow, because that next candle tomorrow morning is going to open right up through here. And when that prints, that'll give us support at about the 320 area. And as long as you hold that 320 area, your SMD or your SMA is going to move up with you. And the next candle that prints will be your momentum candle. At which point, if we break 323, SPY is likely going to continue to move higher and head up towards the 330s and 340s area. And all while you're going to have this 25 SMA as your major support. So as long as we're above that 25 SMA, you're bullish. And if you go to day trade something, what I always do, like if I just come into some random chart, say MU here is popping on some news or something, and I'm looking at it, and I say this little area. So I go to look at it on this day. I see that we're above the 25 SMA and above the 10 SMA. You could day trade that for calls because you're above those lines. Same thing with here. You see green daily candle. You see green volume. You're above your SMAs, so you know calls. You see a red candle here above your SMAs, a red volume day. Why would you want to play puts on that when you know that these are major support areas? So there's realistically no reason to short MU when, yeah, you could. Yeah, that was a big fall. 40, we'll say 48.75 down to about $46. I mean, yeah, it was a good size fall. You could have made some good money shorting that. But at the same time, you don't know if MU is going to catch support here, so why take the chance of shorting it when it's above these SMAs? Same thing here. You see green momentum coming in, buy calls on it. And as it's pushing above that 10 SMA, if you get in early enough, you might be able to catch a big run because it's breaking out above the 10 SMAs. Stuff like this is a little bit of a different story as far as shorting it. You're getting away from the SMAs. SMAs act kind of like a magnet. Once the price gets too far away from it, it likes to pull it back down. So you could risk shorting it there, but I don't like to do that kind of stuff. It's too risky for me. I don't see any purpose in it. Now you can apply this strategy to a daily. You can apply it to a 3-minute. I think you can do it to a 5-minute, but I never looked at the 5-minute anymore. Very same concept. You're breaking above your 25 here. You buy into any of these candles, your sellout is right below the 10. You're breaking below, your sellout right above your 10. You're breaking above the 25, your sellout below your 10. Not every single trade you make is going to be perfect with the setup, but looking at the majority of the odds are going to be winners. This one here, you're breaking out. You got in at 50.93. Your first candle below is at 50.85. Unless you took profit at that 51.07, that was a losing trade because you're breaking down. Your first candle printed below at 10 SMA, so you would have to sell out of that. And because if you don't, you see it breaks the 25 trend and it continues down further. But if you got in that trade and it went against you and you thought, oh hey, I see some support here, so if I see it break down through here and it's looking weak, I could go ahead and short it. Get your entry right through here. Bounces up here, test. That's not a sellout. It's not breaking your 10 SMA. You keep holding it. Up through here, it breaks out. You sell out 50.61. You would have entered approximately 50.70. That was a short, quick little trade. Not a whole lot of money in it, but MU's not always a big mover. Or, I mean, if you had sold it when it was down here in the 50.40s, that would have been a lot more profitable trade. But you get the concept. Here, breaking out again below 25. Hold it. You're in somewhere right through here, say 50.40. If you're fast enough, you're in right through here in the 50.50s. But you hold it all the way through, and realistically, even into after hours, your first sellout would be approximately right here at 49.52. You can apply this strategy to a 1 minute. Breaking out above the 25. If you didn't sell out right there, you would have to use your 25 as support if it broke down through here and you didn't want to break even or you didn't want to take a loss on the trade. You would just have to say, okay, it's breaking the 10. I'm not profitable yet, but I still think the stock's moving up. So use your 25 as support. If it breaks that 25, obviously get out of it. But it held 25, pushed back up. You could have took profit at any of these points that you started to feel weak on it. Everywhere here. Another one, you break down through here, you buy in. It goes against you, but it holds that 25 and rejects. So you get out as soon as you want to trade like this, I would get out ASAP. If it goes against you and holds that and rejects, just for the sake of being safe, I would just go ahead and sell it when you see some green. That trade would have been a bust if you would have got into that. But the majority of the trades will make up for themselves as long as you're willing to hold through. And I didn't really touch up a whole lot on the MACD and the volume down here, but a lot of that's kind of self-explanatory. Like I said, the MACD replicates momentum, so you can see every time the stock spiked down, the momentum is resetting. We're getting up real high up here, and then we had a drop off. So I just kind of use that to help gauge everything. But the main thing I look for is a break of that 25 SMA. And if you're on a 3 minute, you can actually change this strategy a little bit. This is what I posted in the guide. And this strategy works great. Just change your 25 SMA to a 15 SMA. And keep your 10 one there, and you can see it's the exact same, or not the exact same, but it's the same concept as the 25-10. You enter on the break of your 15, and you sell on the break of your 10, or you sell on a break on your 15. If you do the 10 and the 15 SMA, this is more for a shorter term, like quicker in and outs, where or here, I'll change the 10 to a 25 for comparison. So you can see where you have a little bit more of a distance on the 25 to the 15. So either one works well. Go by your preference. It's actually not even bad having the 15 and the 25 there. But yeah, just play around with the SMAs. Another good one to use is a 50 SMA. I don't always have it on my chart. I float around with putting it on there. It works good. You're going to get different results if you put a 50 SMA, which is now the white line, on a 3 minute, where as if you put it on a 1 minute. But you can play around with it. They do work. You can play it. Look at these crossovers even. 25-50 crossover. First candle there, you wouldn't sell out until first candle below your 50. First candle there, you wouldn't sell out until first candle above your 50. First candle there, That one, if you waited until your cross below 50, you would have lost that trade. Unless, I mean, obviously, if you could have sold down there, but if you would have waited for the cross, you would have lost on that one. But that was in an uptrend for the most part, anyways, so you shouldn't have entered that. But those crossovers, it's one of the most powerful trading indicators that you can use, and because it's real time, it's showing you what the price history said for the last several trading days, so it makes it a bit easier. But if anyone has any questions about this, feel free to message me. I'm happy to help. I pretty much go over this in most mornings, anyways. So just let me know.